Hey everyone, welcome back to Judgment Point. It's Monday, June 2nd, and global markets are grabbing headlines again. But what's really going on under the hood? Let's break it down. First up, stocks worldwide are holding their ground after a major rally last week. Wall Street just hit a record high, but today things are looking a little cautious. Everyone's waiting on new U.S. labor data set to drop Friday. So, eyes glued to the non-farm payrolls report. That's the big one, with expectations for around 180,000 new jobs in May. This number could shape what the Federal Reserve does next with interest rates. Now, about that surprise in U.S. manufacturing. May's ISM manufacturing PMI slid to 49.5, which shows contraction. That's a signal the manufacturing sector is slowing, adding a bit of uncertainty to the mix. And in response, the U.S. dollar actually strengthened, hitting 105.20, while Treasury yields ticked up. Inflation's still persistent, and even the Fed's top voices can't agree on where prices are headed next. Meanwhile, over in Europe, stocks dipped by 0.3%. The European Central Bank has its own interest rate decision coming up this Thursday, but most bets are they'll just hold steady. And in Asia, markets were mixed. Japan's up, Hong Kong and China a bit down, reflecting some jitters about economic growth. Oil's another big story. OPEC Plus just decided to extend most of their output cuts into 2026, but they're also planning to start easing those cuts from October. That's kept oil prices choppy, with Brent at around $81.50 a barrel. Gold holding steady at about $2,330 per ounce. Before I go on, if you're finding these updates helpful, make sure to subscribe to Judgment Point and support the channel. It really helps me out. So, what's next? Most analysts think we might see a pause in the rally, with central banks staying laser-focused on the data. Stick around for more updates as we track these moves together. Thanks for watching Judgment Point. See you next time.